let's look at the charts at the major pairs. Beginning from euro dollar, here we are at 104.04 at the moment, just hugging the 104 line. Relatively quiet morning today, but we can see that after the big fall from the Fed, remember we traded 106.60, we fell all the way in a few steps. At the beginning, we had found support here at 104.60. The historic line still remains relevant, still remains a line of resistance at the moment. The March 2015 low, and we fell to the lowest level since 2003. That's right, 2003, not 2013. That means nearly 14-year low. And the 103.66, it's weak support now. We already reached lower levels. So the next level to watch is 103.40. It was a relevant line back in 2002. Below this line, we have one more step to parity. That's 101.50. 101.50 was the first top above parity that we've seen in 2002 before the pair reached higher ground. Again, 2002, yes, nearly 15 years ago. And the next level is, of course, parity. But in any case, we're in the nearer term, we're in uncharted territory. There's lots of talk about parity. And euro dollar, will focus on euro dollar later on in the program. So 103.40, 101.50, and parity are the lines to the downside. To the top side, we have 104.60, 105.20, all relevant lines in in recent months, and above that 106.60. Okay, let's continue. The next pair is, of course, pound dollar. The pound, of course, couldn't withstand the strength of the greenback. Currently 123.54. Next level of support is 123. Very clear to see. We had this line also last week. Yeah, so we're almost forming there a double bottom. Okay, 123. On the top side, we have 123.80. Weak resistance, 125.40 and 126.90. The higher line there is 127.90. That was the initial post-Brexit low. And we have a comment here from FX Ambassador. Good morning. The market is slowing down now. Poor liquidity. Yeah, liquidity is low. Many trading desks are not there, or sorry, vacant. Many traders have gone already on vacation, so beware of these events. Okay, I have a comment here, another one from you, that pound yen is heading to 1.2 by year end. We'll cover pound yen in the next segment about the crosses. We'll discuss the levels over there. In any case, 123 is the immediate level on pound dollar. Under this level, we have 121.70, 121, and the round number of 120. Okay, dollar yen had an amazing run. Remember that on election night, at some point, dollar yen was trading at 101. Look at this seemingly unstoppable run. At some point, we'll have to see a bigger correction, not a short-lived one. But this pair dollar yen seems unstoppable. Currently 117.63. Volatility is also quite high here. 128 is some kind of resistance. I would say things are very choppy. 116 is clearly a line of support. Let's add another line here on the top side. We have 118.80. Okay, 116, which was the line in the sand for the Bank of Japan. 114.80 and 113.80 are lines to watch. Of course, everybody is eyeing the 120 level. Your Wednesday sessions are very good. Thank you very much, FX Ambassador, for the kind words. Okay, let's continue. Dollar CAD. So we have the mixed forces here. On one hand, the US dollar is stronger, and this pushes the pair higher. On the other hand, oil prices, of course, are above the lows. So this helps the Canadian dollar. Currently 133.67, resistance 134.80, 130.540, 136, and 136.60. On the downside, we have 133.80. Well, that serves as resistance, 132.50. And there isn't that much between 132.50 to the round number of 130. We can maybe add 130.80, but dollar CAD has been trading in a very choppy manner. Let's continue. Aussie dollar finally lost some ground, finally went out of range, currently 72.50. Very choppy ground here. Also, commodity currencies are not as good as they used to be. Next level to watch is 71.75, which worked as some kind of support in the past, and the next line is 71.40. So very close lines. And then we have 70.50 and the round number of 70. But remember how hard it has been to break under these levels. Remember, things are not that bad in the land down under. We had mixed signals. Resistance 73, 73.75, and 74.50. Of course, 75 is the top level over there. Kiwi dollar also fell. It showed some resistance. It showed some resilience, tried to resist the strength of the greenback, fell very nicely to the old line of support of 68.80, currently at 69.30, 69.70 works as resistance, just under the round 70 level. Above that, we have 71, 71.40, and 71.80. Lower support, well, there aren't too many lines there. Well, close by, we have 68.40, and then 67.20. Okay. Let's talk about dollar Swiss. People that come usually to the show. No, I don't like this currency, the Swiss franc, but now it's more proxy of the US dollar. 103.30 is the next line of resistance after the break higher. 102.50 is support, so that's the current range, followed by 102 and, well, 100.50 and parity. Okay, to the top side, we have the very round number of 105. So this completes our roundup of major pairs as we head into Christmas. As you mentioned before, there's low liquidity. That means that every small order can trigger high volatility, so trade with